Hello and welcome to Growth and Value Stocks. My name is James Boyd. We also have TBW with us, the Ben Watson. Many of you know Ben. Say hello to Ben. Let's also have a group hug here before we start here today. Let's have a little fun. Now, we welcome you here today. We got with us Kevin with us, Willis, Prakesh, Mike, Jay Richardson, BJ, GT, WW, Michael, Roger, and JP Scott. Aloha back to you. I'm coming your way pretty quick, so I'm looking forward to it. Now, just real quick as we get started, this class is on growth and value. Now, today we'll talk a little bit more about growth. There's some unusual movement and in some of these stocks. Now, today we're going to kind of bring up a little bit why sometimes maybe indexes might flatten out a little bit, but that doesn't mean all stocks do. This is why people actually maybe try to pick individual stocks. We'll talk about that here today on some unusual movers right into the teeth of earnings. Now, just real quick as we get started, I want to give us a quick reminder that with what we discussed, the information I talk about is done for general informational purposes only. Also, Schwab, when we do examples, Schwab does not recommend the use of technical analysis as a sole means of research. So hence we have a class like this where we talk about the fundamentals, how it might complement technical analysis and work maybe together. Also understand that our examples would be done in the paper money software application. When we talk about investing, if we bring up concepts or stocks that pay dividends, those dividends, they may reduce, the company may reduce the dividend or stop paying the dividend. They could also increase the dividend. They could have special dividends. More of the story is dividends are not guaranteed into the future. Also understand that when we talk about investing involves risk, including loss of principal. And also when we talk about growth and value and income, these are really the definitions that we're really talking about here. So when we're talking about, let's say, and it could also be dependent upon maybe what type of goal that you have, maybe where you are in your life and so on, what your needs are or wants are. So we're going to focus a little bit more on that left-hand side here today. And speaking of that, let's just kind of show probably, now I'm just going to kind of point to it. We have crude oil here today up $5. Now, had we had this conversation, okay, and it's at 105, if we had had this conversation a month ago, if we saw that crude oil went up $5, we'd see the volatility in the market shooting to the upside. That is different now. We have VIX where actually today, the VIX is only up a whopping 31 cents. And this is why I said before, the market kind of gets used to this function, if you will, and or people have already put on maybe bearish protection. Okay, now we'll talk about actually some of these energy plays in just a moment. So first off, when you look at kind of the pattern that we've been talking about, especially on the indexes, we've been talking really about the cup and handle pattern, something where we actually we had a prior high, we actually went down, we rallied to the upside, and then we're pulling back. Now, if you take a look at, let's say, the right-hand side, we have, over the last couple of days, we have been in a process of making a higher low, also known as a flag. That has actually been evident on the Russell 2000. It's also been evident on the Dow Jones, which is actually down 275.5%. It's also been a little not as evident on the SPX. And this is where it's like, my gosh, historically, if oil would have been up as much as it is like today, the S&P would have been falling apart. It's not falling apart, at least not yet. And if you look at the, let's say the NASDAQ is blasted, okay, higher on today. Now, does anyone know which companies are announcing earnings here today? That's a question. Everyone type into the Ben Watson. Which companies are announcing earnings today that we might want to pay attention to? Okay, now let's kind of talk about this just real quick. And by the way, I'll show the VIX for just a moment. If you look at the VIX, here we are at 18. So we've seen crude oil actually climb from low 80s all the way to 105. And what did the VIX do? It didn't even get out of our range. And we said before, if this actually VIX stays kind of within these bars, you're probably going to see the market, or there's going to be probably some bullish potential opportunity. Let's talk about some of that opportunity. Now, we do see actually stocks here today, which I have not mentioned, which forgive me, okay? We know that semiconductors have been shooting to the upside as well. They had a little pause here in the last 2 days. Today, trying to bounce back. Type into the chat as well. Are there any semiconductor stocks that we might take a look at? Now, here's the deal. Whenever we do this, we think, oh, now I got to go on an hour-long watch list hunt to look for the perfect stock. We're not looking for perfect stocks. We're looking for stocks that are trending, fundamentally and technically. Now, if we were just to use one tool, a visual tool that all of us could use, no matter if we're beginner, intermediate, or advanced, we're just going to go to Market Watch for just a second. We're now going to go to where it says Visualize, and we're going to see where those moves are. Now, if I look at this, Market Watch, Visualize, how many of us think we could do that? I think we could say, okay, I could do it. I could do it. Well, if I just pull this up and just go to the S&P 500, there's these little white boxes right here, information technology, that's a sector, that's the sector, that's the sector, and so on. Now, you're going to see like a nice little green patch of green here, okay? And we're going to see stocks. And remember, the lighter the green, the bigger the upside move. It hits us in the face that actually Intel is up. Is Intel up a little bit? Was anyone watching Intel here today? Anybody? Or yesterday? We're also seeing the NXPI actually get a move here a little bit as well. ON is getting a little bit move here. And you're going to see the MCHP getting a little move. We're not saying that Micron is bad, AMD, Texas, and ADI are bad. They're just not up the same percentage, okay? So the lighter the green, the bigger the move. Now, let's kind of start with just real quick, INTC. Now, when I show you INTC, you are up literally a full 10% here today. Today, we saw the price gap to the upside. Now, normally, when we look at something like this, we would say, this is insane. Now, this is a stock-based class, okay? So you might choose a strategy that is different than what I'm talking about here, okay? Now, first off, when we had the earnings right on this day, okay, you saw the gap up in the price. Does anyone notice anything unusual about the color of the candles after the gap on earnings? Is there anything unusual? It should be pretty apparent, right? You gap to the upside and you don't even get a red candle on that day. You don't get a red candle on that day. You don't get a red candle on that day. If it's a green candle, it means we closed higher than where we opened. You would think that if something gaps up in that magnitude, that someone's going to be selling something. Well, if they were, there wasn't enough people to smash the price down to counterbalance the buyers that wanted to step in. Now, what I have actually taught quite a bit is the gap. A lot of people get scared by stocks that are gapping. Gapping is not bad. It's showing demand right off the start of the day, okay? Now, the biggest actually thing is here, when we look at something like this, the other thing we've been talking about a lot is dollar cost averaging. I saw something yesterday on the YouTube that said dollar cost averaging instead. I'm like, man, I can't even believe someone would say that, okay? It's one of the most foolish things I've heard in a long time. That'd be a nice way to say it. So the biggest actually thing is when you look at this, when you have these big moves, now we know that some of these stocks, when you look at, let's say, this move right here, we know we are way above the moving average envelopes, which brings the point of dollar cost averaging. If you see an extended move, now why didn't we buy it this morning? We were waiting for the class to start, okay? Now, what I'm going to do in this case is we're just going to try to buy a fraction of what we normally try to do. We know that gap up, the open of that day could be maybe a support level. The middle of that big green candle could be a potential support level. Now, I'm not saying this is the only one we're going to do. So buckle in, we're going to do a couple trades here. Now, on the example of Intel, based on where this class is, that it wasn't done in the morning, if it was, this class was at 9:30 a.m. Eastern, we could have bought it right off the shorter-term moving average. Sad for us, it wasn't, okay? Now, what I'm going to do is I'm going to right-click on this chart, okay? And if we take a look at this, if I bring this up, I'm going to right-click on the chart. And what I'm going to do is I'm only going to buy a quarter of a position. Now, James, in the paper money account, does the paper money account have shares and a different type of strategy? The answer is yes. So you might look at this and say, this is the first time we're looking at it. It's not, okay? We're going to go buy custom. I'm going to go buy custom, okay, with stop. Now, if we go buy custom with stop, what that's doing is we don't have a target on this, because sometimes you might not have a target on everything because you might be hitting brand new highs and you're just trying to ride that trend. Now, if we normally, example given, buy, let's say 10,000 worth of stock, and I'm just going to do this for simplicity from the math. If we normally buy 10,000, if I buy a quarter of a position, it'd be 2,500. $2,500 worth of stock would be 26 shares. Okay. If we buy that stock at, let's say, the current price, 92.78, as is floating around, I'm going to set the stop right underneath today's open price. Today's open price, 85.98. Now, remember, we are not saying that this is the first position we have. I just said that. We have a stock position. We have something that's different than a stock position. We're just adding to the position. I've already also mentioned that if we could have seen this in the morning, which would have been hard not to see, someone might have been trying to buy this morning, or maybe had the opportunity to. Okay. Now, here's the deal. Josh, I know what you're saying, but I think on two stocks, we need to be a little careful. Intel and Amazon. I'll come to Amazon just a second, okay? When we talk about stocks that are kind of breaking above bands that just look very unusual, the one I made mention of the most was Amazon. I did even a video on it. I think it was about a 10-minute video on using the moving average envelopes and talking about which ones might try to go above the bands and kind of, well, continue. I'll show Amazon in just a moment after we look at Micron. Now, if we take a look at this, example number one, buying the shares of the stock, setting a stop. It's saying if we go to that price or less, sell the shares. A stop is not saying exactly where it's going to sell. It's a trigger to sell at that price. It could be filled at a lower price. Send the order, and there it is. Now, I'm going to go back to, let's say, number two. Now, I'm going to pick, now remember, if someone said, well, how do we get a watch list? We use a very simple tool. We didn't have to run a scan, okay? We didn't even have to look at watch lists. This is a visual watch list. Now, what would also be not cool, if we actually brought up, like not bringing up SanDisk, STX, WDC, those have also been very much standouts as well. Now, before I kind of go just real quick to the Micron example in just a moment, I want to just take a quick look. When we go to analyze and then we look at the fundamentals, clearly, okay, there has been something unusual going on. Now, there's two places we can look at the fundamentals. Number one, analyze, and then the fundamentals. And number two is this is going to show us the information. This is only going to go to 2025. We can go to schwab.com and actually see the more updated information. If you would also like to kind of see more about that, feel free. We'll get on schwab.com in just a sec and look at some of these recent numbers. The other place we could actually see this is on the recent earnings of what that earnings was and also what was expected. Okay. So they were expecting negative 10 cents. Okay. And they actually they were positive 29 cents. Okay. Now, what I'm going to do is let's go to Micron just real quick. And as we do this, let's bring this up. Now, if we look at, let's say, Micron, if you said, James, I actually don't know what this does. Go back to that analyze, fundamentals, gives us a nice little write-up on what it actually does. Develops, manufactures, and sells memory and storage products. Okay? Now, if you said, I want to learn more about the company's website, on the company's website, there will also be pretty much on every company's website, almost, will be a link where it says investor relations, which also shows you the PowerPoints of maybe some investor days or recent earnings releases and so on. Now, what I'm going to do is just so we could be looking at this, I want to pull up something. Let's go to schwab.com if I can. I want to go right here and I want to go just pull this up. Let's kind of look at some of this information on Micron. Now, just because we hit a target, and Dean talked about that target on Micron that was reached in a day or two ago, it doesn't necessarily mean that that target, once it actually hits a target, that it can't keep continuing to run. Well, if I look at this just real quick, I might not be able to do that. Let me try it one more time. Okay. Yeah. Try. Okay, I'll fix that. So let me slide that over. I can do two things at once. Now, one thing I want to kind of do is kind of make mention is when you look at, let's say, Micron, you're going to notice that that has had a pretty also unusual move. Longer term, if we look at it, let's say a 3-year weekly chart, you've had a consolidation. Okay. So we just went through the process of rallying to the upside. There's your flag, right? There's that. Well, you could say those sideways to maybe slightly pulling back. And you're going to see that the most recent pull, that was a $186 pull. You actually had this pull right here. We ran up. That's a $133 pull. There was a flag, right? Then you actually go back and say a little bit farther. Here was another flag. That flag right there, the pull itself was 67, consolidation. So if you look at this, you've really had one pull there, two pulls there, third pull there, and you're actually going to see that we have, that's the fourth one, okay? Now, if we were to take this and say, kind of give us an idea, if it, for example, might be going up. Now, the more conservative way to measure from the bottom of the flag itself, that actually gives us a target right around 532. If we take, which some people do this, they take a more aggressive measurement. They take it from the breakout level. Well, let's draw that up. From that breakout level, it's going to get us to a target of, okay, well, it'd be 621. Okay, so the first measurement, I'll kind of mark this on a horizontal basis. It's going to be there. And if you look at that second one, it's going to be there. Not everyone draws the same kind of ways. Me, being more conservative, I would look at that 531. I was with Dean on that when we kind of talked about the target, okay? That wasn't short-term target. Just because we made a high doesn't mean it's the end. If you make a new high, the path of least resistance could be higher over time. Now, when we actually pull this up, if someone said I'd draw it a little bit different, we got 622. Now, the biggest actually thing is when we look at this, we're also going to go back to the trade tab. We're going to use this. Let's go back to, let's say, the daily chart, 1-year daily. And now what I'm going to do is if we take a look at this, we have a red candle here today. The red candle is not that concerning if we're actually thinking that this could just be like a little pause and the investor is trying to buy off the dip of the moving average, to the moving average, I should say. Now, if we're looking at this, we're going to right-click on this chart. Let's go to the paper money count. And what I'm going to do is I'm going to go Micron. So second trade example, we're going to try to right-click on the chart. We're going to go buy custom with OCO bracket. Now, if I do that, what you're now going to see is we're going to have the target. We said about 620 was the target. And then if we looked underneath and said, where do we see a potential higher low? Where do we see a potential support level below us? If I were to ask you that question, where do you see a potential support level? What do you see? Well, that potential support level, we're going to see that it's kind of probably right near the 20-period moving average. Where is that? It's 509. If we take 509.91 less 2%, it's really going to be 499.71. Now, a lot of times people get so concerned about the price being higher. Price just being higher just kind of shows that people are willing to pump up the price. There's demand, okay? Now, the demand could be that it's technically going up, that it's fundamentally improving. I'll show that in just a sec. And that higher price might be justified. Now, if we take a look at this, if I go 499.71, 499.71, dated GTC. Now, what I'm going to do is I'm going to go back and kind of go back to one if we were just going to try to buy it again, okay? Now, if I did this, another 2,500 layering on the position. Now, what I've said lately, and I'll say it again, if you're looking at brand new stocks on a daily basis, you're probably not seeing trends. And understand that trends don't typically die in a day. There could be multiple entries in a longer term trend. Multiple. And so when we talked about last week, buying on the dip, 5 dip entry setups, there's multiple entries. Now, if we said, James, today's the red candle, could I maybe try to set up a buy stop order, a buy stop limit order, that if we go above today's high to trigger that entry? Yes. Okay. Now, some people, they like to buy the red candle closer to the moving average. Does anyone like to do that? Does anyone like to buy on the dip? I'm going to show on Baker Hughes in just a second. Some people like to buy in the red candle because it knocks the price down to the moving average and also compresses some of the risk. Okay. You're actually risking a smaller dollar amount / percentage. Okay. Now, I'll show the math of that in just a second on Baker Hughes. Now, when we look at this, I got a target. I got to stop underneath. I'm going to go confirm and send. And now what I'm going to do is trade number 2. Going to send the order. Now, let's slide this over if we could for just a second. And what I'm going to do is let's type in MU. Now, if we type in MU, we want to kind of take a look at as far as what is going on with this. Why has there been such a push into this space? Now, chart-wise, we can kind of see, but what's causing it? Well, when we actually scroll down, what I want to really look at is, so if you are someone that says, I like dividends, that dividend was 11.5 cents. It did bump 3.5 cents. You don't really think that's huge, but on a 3.5 cents bump, that's an over 20% bump on the dividend. The annual dividend rate, if we're talking about dollar amount, 60 cents, the dividend yield, it's only 0.1%. So you might look at that and actually say, hey, I want to see more than that. But you got to understand that some people don't want the company to pay a lot in terms of the dividend because they want to have them use the money to go grow the business. Now, growing the business could be revenue. Growing the business could be earnings per share. Growing the business could be free cash flow to the firm and so on. Well, if we come down here and look at the earnings, if you think about this in terms of a percentage growth, okay? So here we are, Q3 26 and 1926. This right here, to go from 1926 to 23, well, just take a calculator out. $23 divided by 1926, you get 1.19. Well, if you do -1, it tells us that bump in quarterly jump, just one quarter, okay? We're talking about going, well, from Q3 26 to Q4 26, it's 19%. If we go from, let's say, 25.15 over 23 -1, that's a 9% jump from Q4 26 to the very next quarter. That's a 9% jump in the earnings. And then you're going to see in this case 25.79 over 25.15. The bottom is just the starting point. The top is the ending point. That's a 2.5% jump. So you're seeing this Q3, Q4, Q1. The jump is in this first 3. Now, why is it like that? Well, you might have some new products and services that might be coming out. You also might have some contract renewals that also might be happening as well. So it's not always the case that that earnings is just going to go up and up and up. That's usually not how it happens. Now, when you look at historical earnings, this is where it's interesting. You're going to see that the in blue, dark blue estimate, the actual. When you see companies actually like smashing the earnings forecast, they're not managing the earnings, which you could, okay? In other words, you put the numbers in the quarters that you want them to. They're actually saying, look, we just surpassed, okay? And we're just telling you that we surpassed it hard. Now, could they be guiding the market lower and just beating it? They could, okay? There is. But if you look at that, they have not been shy as far as just kind of surpassing the expectation, okay? Now, if you take a look at this, we also see that this is what's been so interesting. When you look at the forward PE, everyone assumes, well, my God, the stock's at a high. It has to have a high PE. Well, the PE is actually 23. Okay, so based upon the current earnings, it would take 23 years to actually match the price. If we look at the forward earnings, you're going to see it's only 8. Now, why is the forward PE typically less than the PE? It's because the earnings is higher typically in the future than the current earnings. And that's why it's lower. But a forward PE of 8 is unbelievable for a growth stock. Now, even if you looked at a PEG ratio, which is looking at the earnings per share growth rate, okay, usually if you saw a PEG of 1, you would think, wow, that's really low. We're not even at 1, okay? Now, here's what I've learned about numbers. People don't tend to look at the numbers. They look at the chart. If you're really an investor, you look at the numbers, okay? Now, when you look at also the peers, we could also look at this as far as overview, valuation, fundamentals. Click on those to see that. Now, what I really want to kind of see is, I think what everyone would want to see is, what about those current assets? Okay. Remember, if you're married, guess what you want to see? The assets. You also want to see the equity, right? If you're wanting to look at, let's say 21, it's going from 19, 21, 21, 24, 28, and so on. You look at the total assets, you're actually seeing that going from 58 to 82. And you're looking at the equity over time. This is key because it's actually including the liabilities, 43 to 54. Remember, if you're an investor, where do you want to see? You want to go from right to left. If we look at that income statement right there, we want to say, are you making the money, honey? And if you look at that, it's gone from 27 to 37. Okay. So this is, kind of some signs what you want to see. And when you look at the net income, we've gone from 58 to 85. Okay. So if you're looking at the chart and the price is going up, you want to know that it's backed by a business where that operating income is growing, that it's not just speculation on the stock price, but there is a growing functional business. And is there persistence to these earnings? And if it is persistence, that quarterly income statement could be increasing. Then that could actually go to the balance sheet and just stack the cash, baby. Okay. And that cash could actually be used for other things. Maybe they buy another business. Maybe they build a different division of the business and so on. It's not a bad thing when you actually see the income statement higher and then all of a sudden the assets and the equities increase. Not a bad problem to have. How many of you would like to have that problem? I'm not going to repeat the question. That was a pretty easy question. Go ahead and type in the answer, yes. Now, let's take a look at, let's say, just real quick, Micron. Now, on that order, just real quick, we pull that up. There it is. We send that. Now, by the way, that order is not filled. The keyword is yet. We're right there. There being 519.35. If I just move this up a smidge, okay, we're about 50 cents off. Now, I don't normally go down to an intraday basis, but if I'm trying to get the daggum order filled and I'm trying to move it around on the price graph, I'll just kind of take this right here, move it up just a smidge. And if I do that, I'm going to just try to kind of move it up maybe about a quarter. And that should probably fill right there because my line is now above that current price. Okay. So that's when some people might kind of come to an intraday chart. Now, what I'm going to do is let's go back to just real quick Amazon. Now, and there it goes. It fills. Now, one of the stocks I talked about, and I posted this on X last week, did a video on a stock that had stayed in the upper bands of the envelope for a number of days. The example given, and I'll just visually show this here, this light blue line right there, that is your classic 10-day moving average. If you are trying to be a trend trader and or a momentum trader, the theses, the common denominator of trying to ride stocks that can move, the investor is trying to hold positions that are above the shorter term moving average. That's the whole foundation, pretty much. They're trying to say which stocks have demand. The proof of demand would actually be if the stock is above the 10-day moving average. The idea behind the stock is above the 10-day moving average. Number one, you have a trend. With that trend, there's demand. And number two, there is momentum. Now, what you tend to actually see is when the price is above the shorter-term moving average, the price tends to fall. If it does go down, a lot of times you might see the red candles might be 3 or less. And then that price might try to make higher highs and higher lows with shallow pullbacks, hence 3 red candles or less. Now, that's not guaranteed that it's always going to be like that, but you might see that pattern of the price. Now, one of them that actually has earnings today is you're going to see that the earnings, the estimate is 159. Now, 159 on a stock that is at 263, that on an earnings yield, that does not seem that high, okay? Now, if we go back to last earnings, 159, 195, 195, 168. I'm just going to do the quick math. 168 plus 195 plus 195 plus 159, 717 is the earnings over the last 4 quarters. If we look at the classic earnings yield, the last 4 quarters of earnings per share divided by the current stock price, 264, 17-ish. It's about 2.7-ish. It's not the biggest earnings yield we would ever see that we've ever seen. Okay. When I talk about the earnings yield, it's not, if we said dividend yield, you know what that is. The last 4 quarters of dividends, if they pay quarterly dividends. Here we're talking about earnings yield. Okay. The last 4 quarters of earnings per share divided into the current stock price. It's about 2.7%. Now you got to remember something is Amazon has historically kind of been pretty good as far as managing earnings. The last time they've actually, when I say manage earnings, they are not a company that has been shy about using their earnings and also future earnings and making investments into the business. Now, the short-term stockholder says, I just want big fat earnings. Well, you know, this is where you can't have everything at the same time. The last time we had earnings, I know you probably wish you could go back. Can't go back, though. The last time we had earnings, the stock actually went down to 200. It went down to 197 because they told investors, we're taking some of this future cash flows and we're investing it back in the business. And the shorter-term investors said, oh, it's horrible, it's horrible. Well, those longer-term investors said, man, it stinks if you're all short-term all the time because, man, someone really could have potentially benefited as that stock based, as that stock went above 219, which was where that gap down level was, and past the 219. That gap down level was right there. And once you got above that on 4.8, which, by the way, that was only 3 weeks ago, okay? And from 220 to 265, doink, as Bill would say. Now, here's the deal. You look at this type of pattern as far as the price, look, the Iran stuff, look, here's the thing. You got to understand, technicians, they're just looking at the price. They are not people that are looking at macro trends per se, or geopolitical news. The technicians are just looking at the chart. Look, I know it drives you nuts, okay? We just got to realize not everyone looks at the same thing, okay? So if you're thinking, how could it go up with everything that's happening in Iran? Because the technician is not thinking about Iran, okay? Now, the other thing to kind of remember is just because they're willing to make those fundamental investments, that doesn't necessarily mean that they might not have new information, like new investments by others or investments in others, from others and in others, that might not cause that stock to go back up, which has happened, okay? Now, now we're going to have to really kind of see on this one. I don't have now in the paper money account, are there shares of stock? There are. How many shares of stock does it have? I'm not going to tell you that. It's more than one share, okay? So going into this earnings here, you're going to notice that the paper money account is going to hold those shares over earnings. And the idea is, you know, we're kind of thinking is, if you could stay in this upper band this long, could it be trying to make maybe, let's say, break out of that? Now, it's statistically unusual that that happens. But when you stay in that upper band for longer, you know, sometimes the investor is willing to risk to see if it could go higher. It doesn't always work out, though, okay? But there's 2 stocks we kind of say that is kind of doing that. Micron has actually done that, okay? Intel has actually done that. Seabiscuit, I'm joking, it's not Seabiscuit, it's Seagate, okay, has done that. WDC has actually done that. And SanDisk has done that. So when you kind of see that these stocks, they go outside these blue lines, you're thinking, why is it doing that? There's something underneath the sheets or the table that we're not completely seeing, but someone else obviously might have some information if they did, or their analysis, if you will, okay? And they're pumping up the stock price. So I'm not going to change that Amazon position. It is going to hold it over earnings. We're going to watch and see on that. Now, by the way, is there any other company announcing earnings today? Well, let's kind of see on Mr. Apple. Is it today? No, it's tomorrow. My gosh, there's so much to do here. Okay. So these are going to be two big ones as far as are we going to get the push? Now, I do want to go back to, remember we talked about crude oil, right? Okay. When we talked about crude oil yesterday, does anybody remember a stock that we did in terms of energy yesterday? And just name what was the one energy stock we talked about yesterday. Oh, we talked about two, but which one did we paper trade? The one that we paper traded was Chevron. Okay. Now remember, I talked about yesterday correlation. Chevron does not sell Easter bunnies, or they don't sell eggs, or they don't sell soap, right? Their earnings are actually derived from what the oil prices do. What do the gas prices do? If those actually prices go back up, it gets priced in pretty much immediately that there is a correlation to the price of oil and what those earnings could do. When I say earnings, I'm also saying revenue. Now, we know that actually that has earnings coming up, 2 days from now or so-ish, okay? Notice Exxon also starting to get a little push. Same time earnings is going to come out. May 1st, check on that. That might be Monday. But the one I'm going to talk about just real quick is PSX. Well, actually, I want to flag just real quick Baker Hughes. Okay. Now, remember, when you look at something like this, what did we see recently on the stock price? We saw a pull. Whenever you see a pull, a little run up in the price. And so far, let's count them. 1 red candle, 2 red candle, 3 red candle. Okay, now we're thinking, okay? So now if we're looking at this, okay, we've had 3 red candles. What tends to come next if we get a bull flag? Now, the average investor would say, well, I'm going to wait to see. Look, you can wait to see, but could you put in an order? Yeah, sure. Buy stop limit alert, right? Now, if we see this, if I just made it high, so first of all, if I made a pull, there's 1. 2, in that poll, I made a brand new high. 3, I'm running out of fingers here, okay? 3, I've actually had a flag. And what tends to happen after the poll? A brand new high and a flag. A lot of times tend to make a higher low. Now, if I know that, do I just say, yeah, I'm just going to wait to see what's going to happen? You could, or you might anticipate, okay? Now, of these 3 days, 1, 2, 3, which is the lowest? That day is the lowest. Today, what is the high of today? 69.25. Now, for simple math, I'm just going to set the buy stop limit a quarter above today's high. I'm going to right click on the chart, buy custom, and I'm going to go with OCO bracket. Okay, now your job. So now what I'm going to do, now remember, a lot of people will say that I'm going to wait for that pullback. I'm going to wait for that brand new high. It just always feels like they're waiting. Okay. If I go to stop limit, that buy stop price is what I said. A quarter above today's high. What's today's high? 69.20. To be technical, 69.21. But I'll say 69.20 for easy math. I'm just setting that buy stop price a quarter above today's high. Okay. Now, can anyone explain to me why would someone try to buy a stock at this price or higher? Because you think it's going to go up. Do you know it's going to go up? No. If it goes up to that price, it could be showing that we're going from a pullback to where it's starting to push back to the upside. What is the purpose of the limit price? It's putting a cap on what you're willing to buy the stock for. Okay. Now, what I'm going to do is I'm going to go data GTC, data GTC, data GTC. Now, if this recent pullback area becomes a place of seaport, Well, that's actually 69.27. I'm going to take that 67.27, excuse me. 67.27, okay? Less, let's say 2%, because it's over 50 bucks, 65.92. Trade number 3, 65.92, GTC. I'm going to go back to the pool balls percent dollar amount. We're going to type in that, let's say we use the example given 2,500. Too many zeros. There it is. Now, what about the Target? Now, remember, we're just going to go back and use the trend line to measure. If I use this trend line, and if I go, where did this recent pull start? Where did the pullback end? It's about right there. And I'm going to go from body to body. Okay. That body to body move is about $10. Now, I know people say, well, if enough people are thinking the same thing, people might put a trade on expecting the movement to be similar. Yeah. Okay. It's a fair comment, but people act like this is the first time they've ever seen this in their life. If you've ever bought a house and you thought, well, I think this area could go up. When you buy the house, kind of thinking that the house might appreciate because it's a good area. Okay. And there's many other examples. If I buy a car, I'm thinking, if I buy this car at $40,000, I'm not hoping this car goes down to zero. If I buy the car, I'm thinking it's going to be a trusted car, that if I need to sell it, there could be a market for it. And third, that it might hold value, right? So when you buy something, there's usually always some forward expectation. Else, why would you buy it? Why would you take the job if you thought you were going to be fired at the end of the day? Okay? So here's the thing. Don't think about looking at the future as bad, but you don't know the future. But there is some estimate of what you think it could do. Same thing with stock trading. Well, if we go back and say, well, what is that estimate? Well, that estimate, I duplicate that Target is going to be right around about $78. Now, forgive me here. I just want to make sure that where I drew this from, it was from the body. And I want to make sure that bottom line is touching the body. And then I'll verify what that target is. That target, it's right around $78. Right here. Okay? Now that's $78 sitting right there. And I'm going to go ahead and put that target right here. Well, what about Iran? What about it? Okay? Now, the biggest actually thing is when we talk about this, what about Iran and how is it actually affecting the oil price? Well, we're trying to actually look at an energy price example. Now, here's the thing. We're not buying oil prices. We're buying a company that could benefit or not benefit from the prices of oil. So if you buy typically any energy stocks, you're thinking that energy, that commodity, could rise in value and affect the revenue and earnings per share and so on. Now, what I'm going to do is go confirm and send the order. Remember how the stock works. It's saying if we go to that price or less, sell the stock. Now, I want to make mention of just real quick, and I'll fix that order. Couple other ones that I just want to make sure that we understand that are kind of showing. Valero, if we said, hey, can I see an example of those five dip patterns? I mean, example given, Valero, okay? We also see the example given of Phillips 66 doing that today, okay? And then if we also look at Fang, okay? Now, these are some of the main ones that you kind of talk about quite often. Fang, Mr. Fang, was actually a brand new close above the high of the low day yesterday with a gap enter here. We cannot say it's too high, okay? It looks like it gapped up a lot. It was 1.5%. Let's just be honest. Now, remember, when you're at this prior high, okay, and you're sitting here, this is your continuation pattern. Now, if I do anything, I sure hope that you have a newfound appreciation for it. New highs are not the enemy, okay? New highs are not bears. New highs, they're manna from the technical gods, if you will. New highs are people trading the technicals. New highs could be backed by the fundamentals, and new highs doesn't necessarily mean those valuations are stretched. As we saw with Micron, they had a forward PE of 8 and a PEG ratio of less than 1, 0.1%, and a PE of 23. Walmart trades with a higher PE than that. So here's what I've actually kind of found. A lot of times when people see brand new highs, oh yeah, it's overpriced. You didn't even look, okay? And the other thing is people don't really know how to calculate what is the justified multiple, okay? To make comments like that, you actually have to run the numbers, okay? Now, what I also got to do is in closing here, I want to thank you for answering your questions in chat, answering those questions in chat, Ben Watson, and for answering those questions as well. You asked them and answered, and I've been also trying to watch as well. Now, the big thing is keep an eye on Google, okay? That's the other one that has earnings this week. We're going to also kind of see if we can't get a push. That is today as well. There's a lot going on here today, okay? Now, also keep an eye on Altria in closing, okay? That's the one that might be trying to get out of that basing pattern as well. That earnings is tomorrow before the market opens. I'm out of my time here today. If you have not subscribed to the Trader Talks channel, do so. It's free, okay? Also, I want to, again, thank you today for those questions. And remember that with what we talked about here today, was done for example, illustrative purposes only. All investing involves risk. It's okay to be prudent and dollar cost average and try to get into these trends over time. Dollar cost averaging is where you're trying to assure that the stock is trending and you're applying capital over time. Now, with that said, remember, all investing has risk. I wish you a great day. Stay tuned for our next webcast coming up next. Thanks so much. Take care. Bye-bye.